$209 billion. That is what venture capital poured into American startups in a single year. The money that decides which ideas get built and which ones quietly die. Right now it is 2 in the morning, and you are alone in front of a glowing laptop with nothing but an idea. You think you are about to build a company. You are about to be slowly rebuilt by one. This is every level of a founder, from the idea worth nothing to the people who price every founder alive. It starts as a feeling that something should exist and does not. You have lived the problem yourself, and you cannot stop seeing it. So you start building it at night, after the job that still pays your rent. No salary, no company, just you, a laptop, and a conviction that you are right and the world has not noticed yet. This is the purest you will ever be. Then comes the leap. You quit the steady paycheck while everyone who loves you tells you not to. You drain your savings into the thing nobody has asked for yet. You tell yourself the risk is the point, that the people who change anything are the ones who bet on themselves. You are not wrong. You're just very early and very alone, and you have no idea what early really costs. You need a co-founder because you cannot do this alone, and the smart ones never try. Over dinner, you convince the best engineer you know to leave a 6-figure job for a dream and a slice of nothing. You split the company on a napkin. 50-50, friends forever. Neither of you reads about vesting yet. That conversation comes later, and it is never friendly. You ship the first version. It is ugly and it barely works, and 10 people use it. 2 of them email you to say it changed their week, and you read those emails 40 times. This is the drug, not the money. There is no money. The feeling that you made something out of nothing and a stranger needed it. You will chase that feeling up 8 levels and slowly lose it the higher you climb. You raise your first real money. A pre-seed check, a few $100,000 at a $6 million valuation from an investor who liked your energy more than your numbers. It feels like winning. It is actually the first slice cut out of the thing you own. You still pay yourself nothing. The money is for the company, and you are not yet the company. Now you live inside the work. 16-hour days. You are engineer, salesperson, support line, and janitor. You sleep badly and you answer every message in 4 minutes because each user feels like life or death. Your runway is a number on a whiteboard counting down, and you do the math every Sunday night. How many months until the cash runs out and the dream becomes a story you tell at parties? Demo day. 90 seconds on a stage to make strangers believe. You learn the first dark art of the founder. The pitch matters more than the product. You round the numbers up. You say we when you mean I. You describe the future in the present tense. It is not quite lying. It is the precise, hopeful exaggeration the whole industry runs on, and you are good at it. You meet your cap table, the spreadsheet that is the real scoreboard of your life now. Founders, the option pool you carved out for employees, the investors, their safes and notes. You started owning 100% of nothing. The plan is to own less and less of more and more, until a single-digit slice of something enormous is worth more than the whole of what you have today. You raise a seed round, around $3 million at a $15 million valuation. You finally pay yourself a salary, $132,000, a fraction of what your engineers turned down to join you. You sign a lease. You hire 5 people who believe in you. Overnight, you stop being a builder and become the thing a builder dreads. A boss with a payroll to make. The hunt for product market fit becomes a religion. They told you it feels like the market pulling the product out of your hands. Mostly it feels like nothing is working and you're aligned to keep everyone calm. You pivot twice. You kill the feature you loved because the data does not. You are learning the founder's hardest lesson. The company does not care what you wanted to build. A term sheet lands and you read it 5 times at midnight. Buried in the polite language is a liquidation preference. The investors get paid back first, before your team. And a board seat. You sign because runway is oxygen and you're out of breath. You have just traded a piece of your control for the right to keep going. It will not be the last time. Your co-founder, the one from a napkin, is not keeping up, and everyone can see it but you both. An investor takes you aside and says the word out loud. Vesting, the cliff. You can let them go and keep most of their equity. You have the conversation that ends the friendship. You tell yourself, it was for the company. It was. That is exactly the problem, and you feel it close over like water. Product market fit arrives, and with it the Series A, roughly $12 million at a $78 million valuation. Your salary climbs to $179,000. After 2 rounds, you still own about 36% of your own company. On paper, you're a millionaire who cannot spend a cent of it. The job changes again. You no longer build the product. You build the machine that builds the product. You scale. Servers, systems, processes, headcount doubling every few months. You hire managers to manage the people you used to know by name. You stop writing code. You stop talking to users. You spend your days in one-on-ones and dashboards, further and further from the small, real thing that made you fall in love with this in the first place. The board meeting becomes the center of your month. Slides, metrics, a story arranged to look like inevitability. The investors who funded your dream now ask, gently, when it will become a return. They are not villains. They have their own bosses, the limited partners whose money this is. Everyone in the room answers to someone above them, and for the first time you wonder how high that ladder actually goes. Late at night, you open the cap table and watch your own slice shrink, round by round, like a tide going out. 100%, then 36, soon less. You realize the company you started has quietly become a company you merely run, and that the people who own most of it have never once stayed until 2 in the morning to keep it alive. Series B, then C. The valuation crosses $400 million, and the strategy becomes a single phrase: grow at all costs. Burn the capital when the market, worry about profit later. Your salary is $227,000 now, but you own only about a quarter of the rocket you are strapped to. Speed is the religion. Efficiency is a problem for a calmer year that never seems to arrive. You chase the numbers the market rewards, and some of them are not quite real. Growth that costs more than it earns. Users who signed up and never came back count it anyway. You are not committing fraud. You are choosing every quarter the metric that tells the prettier story. The same hopeful exaggeration from demo day, now wearing a suit and printed on a billion-dollar slide. You sit at the head of the table now, and the table is large. Hundreds of employees depend on the words you choose in this room. You have learned to speak the language fluently. Runway, leverage, headcount, efficiency. Somewhere in the fluency, the people became headcount and the product became leverage. You notice it. You keep talking. The quarter does not pause for your conscience. Then the market turns and the cheap money stops. To survive, you do the thing you swore you never would. You lay off 1/5 of the people who left other jobs to believe in you. You write the memo about a difficult decision and a bright future. You mean some of it. The early ones, the napkin-era loyalists, their stock options are now worth less than the paper you printed them on. You raise again, and this time the press release uses a word that did not exist when you started. Unicorn. A $1 billion valuation. Your stake, on paper, is worth around $150 million. Money you cannot touch, locked behind preferences and lockups and a future sale. You are a paper centimillionaire who still checks the company bank balance before approving a new hire. You walk the atrium of an office with your logo on the wall and 1,000 people inside it, and you can no longer name most of them. You are on magazine lists. Students email asking for your secret. You give talks about mission and impact and changing the world. The mission is still in there, somewhere. It is just also now the marketing, and you have stopped being sure which one you mean. You sell a sliver of your shares in a secondary, a few million in real, spendable cash at last. The house, the first-class seat, the fund manager who calls you a client. You have arrived at the life the 2 a.m. version of you would have killed for. He would be amazed. He would also ask, quietly, what happened to the thing you were actually trying to build. Alone in the office after midnight, you admit the thing you cannot say on stage. You are not sure the company should be worth $1 billion, and you are raising the next round on a story you no longer fully believe. But 100,000 people's livelihoods now ride on the story, including yours. So you sell it harder than ever. The narrative has become the product. You're its best salesman. The exit. You ring the bell, and the ticker carries your years onto a wall of screens. The company opens valued near $6 billion. Your 8% becomes real, liquid, generational money. You are, by any definition the world uses, a winner, the rarest outcome in a game where 9 in 10 companies die. The photographers shout your name. You smile. You feel, mostly, an enormous and confusing quiet. Public life is a different animal. Quarterly earnings. Analysts who have never used the product setting the price of your sleep. A board that can now, politely, replace you with a professional CEO who knows how to manage a stock. You built the thing from a feeling at a kitchen table. You will leave it as an asset, optimized by people who arrived after the hard part was over. So you step back. Founder and chairman, a title that means you are honored and no longer needed. You have more money than you could spend in 3 lifetimes and a strange, hollow, Tuesday afternoon freedom. The company you bled for runs perfectly well without you. You learn the last lesson of building something great. If it truly outlives you, it stops being yours. You read that the company you founded has cut another division. The original product, the 110 people once loved. It is a line item now, in a portfolio, in a quarter, managed by a stranger. You feel a grief you cannot quite justify to anyone, because by every visible measure you won. And in the winning you discover that the next level was never about building at all. It was about owning. There is a level above founders, and almost no founder ever reaches it. You stop building and you start allocating. You become the capital, a partner in a fund, deploying other people's billions into the next generation of 2 a.m. believers. $209 billion a year flows through machines like the one you now sit inside. You have not shipped a product in years. You have never been more powerful. You move between worlds the way money moves downhill. The fund, the board seats, the companies you seed, the bankers who take them public, and back to the fund again. You take 20% of every gain and 2% just for holding the money. You fund the pattern now, not the person. You have become exactly the thing that once deluded you on a midnight term sheet. A founder builds one company. You decide which companies are allowed to exist at all. 9 out of 10 of the people who pitch you will fail, and you choose the 1 in 10 in an afternoon, between lunches, the way you once begged for a single check. You do not build. You do not ship. The most powerful person in any startup is the one who never has to start one. The idea, the napkin, the first 10 users who emailed to say thank you. These were not things you lost on the way up. They were things you exchanged, knowingly, 1 round at a time, for altitude. You created more value than almost anyone alive. You also stopped somewhere around the 4th raise, being the person who 2 a.m. you was actually trying to become. Somewhere far below, it is 2 in the morning, and a young founder opens a glowing laptop in a dark bedroom. She has lived a problem nobody has fixed, and she cannot stop seeing it. She has an idea and a deck and a conviction that she is right. She thinks she is about to build a company, and somewhere far above her, a fund she will one day beg for money is already deciding whether she gets to exist. The machine never builds. It just finds the next person who will.